Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Bajaj Electric, one of the consumer brands here in India which sells a lot of products, but the stock is not doing well. So let's understand what has happened with the stock and what you need to do. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Bajaj Electricals. Well, the company was established in 1930, so quite an old brand. It's around 90 years old company, and it has pan-India presence. So it sells a number of products across India, whether it's north or south of India, and they produce fans, geysers, heaters, hair oils, and also some of the skin products. So they have presence in a number of products and a number of segments. But having said that, there are other companies who produce the same products here in India, and there is heavy competition. So we'll talk about that later on. They also exports to around 30 nations across the globe, majorly in Asia, and it is the part of the Bajaj group. So there is a sigh of relief for all the investors who want to invest in small cap companies, that this company is backed by the Bajaj group. So there could be very less chance of any corporate governance issue or integrity issue. Looking at the financials, and this is where the trouble is, because if we look at the numbers, then the sales have dropped tremendously by over 30% year on year. We are looking at September 19 numbers compared to September 18. So we are looking at the quarter that has just gone by. So take that into account, and not the financial year, but I'm saying the calendar year September 19. And we had a profit of 30 crores in Bajaj Electricals a year back, but now it has dropped to negative 32 crores. So the profit has gone into losses, so the company has gone into losses, and the major reason for that has been the high level of debt that the company has taken. The debt has nearly ballooned to double to what it was a year back. So very high debt leading to very high interest costs. Currently trades at a PE of 49 or 50 times, which is expensive for a company which is not doing well on the sales front. And as I said, the interest cost has ballooned over the last 1 year. Looking at the technicals of the company before I look at the reasons for all this mess in the results, but looking at the technicals, the stock is trading at well below its 200 DMA, which is around 445 or so. The stock is at 328, 330. It saw a breakdown on charts following the Q2 results. So when the Q2 results came out, after that the stock started to fall sharply, and it fell from that 450 470 region to around 300 levels. uh, Although there is high promoter and institutional holding, so that holding has gone up to around, you would say it's up to around 77-80% if you include FII DIIs and the promoter holding. So only less than 20%, I think 18 or 19% is with the retail investors. But if the results continue to be bad, then I would say that this would change sharply over the quarters. In terms of technical levels, 342 343 levels are very strong resistance for the company, whereas 315 320 levels are very strong support at the moment, or critical support. If that breaks down, then we could see even 280 levels in the stock. Currently the market cap of the company is 3400 crores. So as I mentioned, that it is a part of the Bajaj group, and it is a consumer company that is coming at a market cap of under 4000 crores. So that looks pretty attractive, but the numbers have to contribute as well. So why the results have been so bad? First and foremost has been the reason being the high interest cost. So the debt that was around 900 crores or so a year back has ballooned to 1700 1750 crores at the moment. Taken a lot of debt in order to expand, in order to bring in new products in order to compete with other companies that are in the same domain. There are many companies which are listed and unlisted, which sells hair oil, which sell skincare products and are doing well, which sell electronic consumer products like geysers, heaters, fans, etc. So in order to compete with them, because probably Bajaj Consumer itself did not had so much of money at hand, the company started to take debt over the last 1 year, and they have done well because the products did start to sell. And apart from this quarter, the other 2 quarters had been good, but this quarter we have seen the sales drop as well. So competition is another reason why the sales have dropped. Probably they are losing market share to other main major competitors in the same you can say products. The margins have dropped because of higher competition, because of lower demand. They had to cut prices in some of the products, so the margins have dropped as well. And the sales have dropped sharply. I mean, a sales drop of 35% is huge for a consumer company in a business where the market share changes by only 0.1 0.2% every 2 quarters or so. So a sales drop of 33% is huge, and that has led to the bottom line becoming so bad, because on one hand you're taking a lot of debt, and on the second hand on the other hand you're not having the amount of sales, at least a sales growth that we are seeing in future consumer, a stock like future consumer, that we are seeing at least some sort of a sales growth, although the company is still in losses. But here we have losses on the bottom line, and there is a sales degrowth. So that is very concerning. And probably lower demand of the products has also led to it, because of what has happened across the board with the recession taking place here in India. So what needs to be done? And I would say this is an avoid at these levels, and avoid at even 260, 270, unless and until the results turn around. Do not get into the stock. You have many consumer companies which are doing very well, even though they are large cap or mid cap companies. There are many in the mid cap in that 20 to 30,000 crore range that are doing very well. There are consumer ancillary companies that I have talked about, uh, which are doing very well, which supplies to consumer companies raw materials. So look at those companies rather than investing in something on hope that the results will turn around and this will shoot up. Look for companies which are producing good results and are doing well in the market. And let the stock correct, let results improve, and only then get into this stock. Probably it will correct to 280, 290 levels. Probably we'll have one more bad quarter. Probably we'll have three bad quarters. We don't know. So let the numbers come in, let the stock correct completely, and then perform. And then you look at investing in Bajaj Electricals. And also keep in mind that you buy the best in the business. And we all know in geysers, etc., among the listed companies, when there's cold weather and all across, Havels does pretty well in terms of sales and everything. And now they have got the Lloyd brand as well. So probably they'll do well in summers as well. Although the stock doesn't move a lot, but it gradually moves up, it doesn't fall a lot. And that is a sign of strength of stock, because there is not much selling, because strong hands are holding the stock. So look at that company as a market leader. um, I have no doubt they will perform. So buy the best in the business. So this was my video on Bajaj Electricals. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.